Freebird, lot of questions on Facebook yesterday, man.
Yep. So let's just get right into it. So the stock's been under siege over the last week. You had two negative pieces out from the Wall Street Journal saying that Facebook doesn't apply its rules to all, that its cross-check program protected certain public figures from sanctions. This was then followed up by another Wall Street Journal article saying that management knew Instagram is toxic for teen girls. So, how could this all potentially translate to fundamentals? It's not really from a user perspective, but if advertisers decide to pull spend back because they don't perceive Instagram as being brand safe, or if this series of bad press stokes another advertising boycott like that we saw last summer, which I'm putting in air quotes when I say boycott because these advertisers can't really afford to stop advertising on Facebook. They always come back, but it can definitely have a short-term negative impact on spend. And that all happened, last week. So it's really all transpired in the last 5 trading days. And for those, that wondered why Facebook always looks so cheap, it's, partly for these social and regulatory risks. But I'm bringing that up because it just sets the stage for the blog post to advertisers that they put out yesterday, acknowledging increased headwinds they're seeing related to the removal of the identifier for advertisers, also known as IDFA, due to the iOS 14.5 rollout. And it's really just been kind of adding into the perfect storm of negative headlines. So as it relates to IDFA, I know it sounds scary, the headlines sound scary, but we knew this was coming. The company has repeatedly flagged every single quarter for the last year that there's going to be incremental headwinds related to this change, including in July. We talked about it at length during our last themes call in our field notes, including a note that we put out yesterday. And I think is already well reflected in the growth and earnings outlook. And I still think that there's reasons to believe that there's upside still to Q3 results and Q4, just given where estimates are currently.
Yeah, being a growing advertiser in that platform, the probability of us moving that to the other place for some kind of optical or political or whatever reason is zero. In fact, and we've talked about this a lot, Facebook actually shut a lot of people down from even paying them in the third and the fourth quarter last year, which was a technical issue on their front. So, fact of the matter is, it held trend. It would have to break like 325. Top end of the risk range actually today, because anytime you get a little bit more volatility, you get a wider range. It's now a new higher high at 390, and so that's very bullish. And moreover, to my friend Mike there in the 20% correction, if Facebook goes to 390 and the S&P is only at this point 2.5% away from its all-time high with Facebook down, Mike and everybody else can do the math. That's going to be perpetuating all-time highs and SPYs. So if Facebook reverses, and again, earnings season is a big catalyst for some stocks like this that are at the low end of the range into the number.
I mean, I think they can put up a 40% growth rate, right? The street's at 37%, and it's already implying a sequential slowdown, right? Beyond just more difficult comparison. So to your point, if we get to earnings season, they come in just slightly ahead with the stock down here after this series of negative headlines. We're already trading at kind of the low end of the historical valuation relative to the S&P on a PE basis on my 23 numbers, which are still above the street. So I think it makes for a good setup.
It's a real good setup. Implied vol, too, is like almost 50% or higher on Facebook into the print. I mean, people are hedging it. You want that setup as a bull. You don't want to be at the top end of the range into the number. Okay, good. Real good.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.